Hello everyone, Jesse Webb, Traders Pro. Market conditions moved back mildly bullish in this bull market. A nice rally yesterday on S&P 500. Overall momentum shifting back up. It was stuck here for a couple of days, moving back up towards this upper momentum zone. We'll see how much confirmation and continuation we get from this overall price pattern. We are seeing breadth in this upper location, as well as sentiment in this upper location. Those are extreme to the upside, but on a pullback, that's actually kind of what we want to see. We want to see this momentum continuing this direction in terms of the number of participants in the overall rally. So that's what we're seeing here with breadth. And then we also want to see market sentiment to be quite good. We still want to see it relatively complacent right here. That means that there's going to be some FOMO, there's going to be some dip buying, and that's still the overall market bias at this time. We do have buy-sell ratio that is moving back towards a crossover, but that move yesterday did gave it a little bit of a blip right here, but we are seeing buy-sell ratio at 1.63. So anything above 1 is still bullish, a bullish market condition that we want to focus that overall bias on. We do have a few things dealing with the market at towards the top of this range, and this is going to give us a little bit of a clue that things are weakening. We certainly know that. We also know that when we look at sectors and we looked at this yesterday, this overall, the number of sectors that have moved either to shorter term downtrends or to holds is now the majority. We'll see if another day or two we start to move back up. You're seeing that short term trend on those that yesterday we had a lot of those down, 2 or 3 of those had ticked back up again. So a good solid rally across the board yesterday. If we look at S&P 500, we've got a nice pop on SPY. This is the 1-year chart. Let me move this so you can see that bar just a little bit more clearly. So we had that pullback. We talked yesterday about a couple of ranges. This support area right here, I had mentioned that it really should hold and needed to hold at this level, and we did get a nice pop. We'll see if we get confirmation or if we get any kind of reversal back down, but this now is a solid support area with essentially 2 touches of that support zone. Really 3 or 4 touches. You've got one here, and a couple right here, and those areas just now turned the corner for support, for demand to start to come back into the market. And that's the 1-year time frame on SPY. If I change this back, we go into the 6-month time frame. We talked about that 461 range. So even if we can't hold this, if we get a rally and some resistance and we start to move back and we get a deeper counter trend, we could still counter trend into this 461 range. The market may want to just really take off from here, so we'll see what kind of follow through we get. We're at all-time highs on Dow and NASDAQ. Not NASDAQ any longer, but we're in that range on all markets at all-time highs, and the S&P 500 is also inside of that range. So this upper range, we're just dealing with some overhead resistance and some time for it to pull back. Was really necessary right here. We also saw bonds move yesterday. If we look at the TLT, which is the 20-year on the 6-month time frame, pulling back, a little bit of a confirmation bar right there. And if we go out to that 1-year time frame, this 95 range is looking like it wants to hold up some support, as it should. When we're talking about these ranges, when we're using this fib snap tool, which is essentially looking for the current trend on the current time frame, it is this button right here that you just simply click it, and it's going to attach to the highest point and the lowest point on that chart for that time frame. So currently the highest point is here and the lowest point is here, so we know it's a downward sloping trend. So now this is still counter trend to that in this time frame. On the 6-month time frame, I believe that's starting to shift now. Not quite yet. If we were to move this to a little bit shorter time frame, there it goes. You can see how it just jumped from one trend to the other depending on the amount of data that is showing here. So that trend, so now in this time frame here, in this overall uptrend, bouncing off of that 236. So the momentum zone now for bonds is in play and starting to hold up. And right at the right amount of time here. We don't want too much retracement in an overall uptrend. We'll see if that also holds. Let's look at a few stock ideas for the day that are coming up in the list. Got some nice looking stocks here. NVIDIA is a real big player, obviously is a big player in in the AI movement, and we had a really solid breakout on NVIDIA. It's taken some time here towards this upper range as it's gone through two earnings reports that have both been really, really good. Now we're getting a breakout. We could see some real momentum building for NVIDIA once again as you get momentum money that's now starting to jump in. Keep an eye on NVIDIA this week. OSCR is also a nice healthcare stock with a really clean looking pattern and a bounce off of this 236 and continuing that overall upside. So some nice looking stocks in that new buy list today as markets are showing a little bit more strength and confirmation. And as we work ourselves through this counter trend and retracement towards the upper end of that range, but still having some solid momentum and some really nice stock patterns to take a look at. That'll do it for today's update. If you don't have full access to the software, you can learn more at the links below, and we look forward to having you. Have a fantastic day today.